Those are the headlines we are tracking for you this evening. Speciale Invest, a venture capital firm focused on early-stage investments in deep science and enterprise technologies, has announced the launch of its Speciale Invest Growth Fund 1. The new fund has an initial investment of 100 crore rupees and has received approval from SEBI to provide Series A and above funding to high-potential technology startups supporting India's enterprise and deep tech startup ecosystem. To talk to us about Speciale Invest Growth Fund 1, joining me now is Managing Partner Vishesh Rajaram. Also joining me is my colleague Arundhati. Vishesh, welcome to Startup Street. Now, Speciale's investment philosophy is centered around providing capital to startups within the potential to disrupt and transform their industries. What areas within emerging technology are you going to focus on, and how many startups are you looking to fund this year?
Hey, hi, thanks for having me here today. So if you step back, we've been actively investing for the last 5 to 6 years. The sectors that we've historically focused on include space tech, industry tech, robotics, quantum security, semiconductors, and most recently, energy transition. I think going forward, we continue to see a lot of opportunities in semiconductors, in climate transition, climate tech, and we're also focusing more on the biosciences side. So we're hoping to do between 3 and 5 deals over the next 2 years, each year, so about 8 to 10 deals between 2023 and 2024.
All right. Vishesh, the new fund has an initial investment of 100 crore rupees. Where do you hope to close the fund finally? And as a deep tech investor, what is your take on AI? While there are apprehensions it is taking the world by storm, your bets on this space?
So the fund size itself, we expect to possibly in about 2 quarters from now end at about 200 crores. That's sort of the limit we've set for ourselves, as we expect to use this fund to largely double down on existing portfolio companies and participate in their growth journey. Coming to the other question, particularly on AI itself, a lot of it is uncovering as we speak. There's GPT-4 and 5 that we're talking about. I think it'll be interesting to see applications that you can build on top of these large platforms or large technologies. And I think the opportunity that we're seeing internally is also around where you could use these to create a quantum impact in how technology is consumed.
All right. Vishesh, hi, Arundhati here. You hope to make follow-on investments in winners from your early-stage portfolio companies. So take us through which ones you're betting big on. How well are your portfolio companies faring at this point?
So, of course, it's early days. We're doing deep science and tech. It takes between 5 and 7 years to see really strong results out. But I think we've been a bit fortunate across, the Fund 1 portfolio. We've got a few investments in space, Agnikul, Cosmos, Galaxy being the other. Both of them sort of raised follow-on rounds of capital, continue to progress well on the technology roadmap. We've got E-Plane company. They've got a prototype that they should be flying soon. And we've also got Synlo Robotics, which about a month ago put out one of India's largest robotics R&D center.
Right.
So we will see some of our investments go to some of these companies from Fund 1 as we play out. And we've got an exciting set of software companies and hardware companies in our second fund, Nutrace One being in the hydrogen space. We've got Cuno Labs, which is in the quantum security space. And most recently, another investment which makes lithium batteries for the country.
All right.
So some of these I'm sure will raise growth capital as we progress along, and we're keen to be part of their journey as they scale up.
All right. Since you mentioned your first fund and your second fund, in 2018, you raised your first fund, which backed about 18 companies. And we've seen about 5 early exits. And you plan to invest in 20 to 22 companies via your second fund. So where are you on that front in terms of investments? And what's your exit strategy?
So Fund 2 is still in its early days. I think we've invested in about 10 companies, call for about less than 30% of the capital. So 2023 and 2024 is going to be all about going in and working on more companies and trying to pick good technologies that we want to back in. So we expect to invest in 10 to 12 companies between 2023 and 2024. So that takes the overall portfolio size to about 2022.
Okay. Amid a funding winter where we have mostly seen early stage funds come up, you will be investing in Series A and growth stage companies. Are the valuations looking attractive to you? Have you seen a recalibration in valuations right now?
So I think, I mean, I've been in the business now for the last 16 years. If you're long enough, you're going to see these cycles every 5 to 7 years. What's constant is that these cycles will come and go. You will find winters, you'll find summers. So given that we're investing over a 3 to 5 year period, we largely insulate ourselves to some of these short-term trends that shape up. But I think coming to your specific question, the deep science and tech play, at least that part of our portfolio, has not seen much of a multiple compression because that entire vertical or that entire segment is still very early and evolving. So it's still early to call verdict on whether there's a multiple compression of it because there aren't global comparables to this, right? Some of these companies are truly building out of India for global markets, and hence it's not easy to say that, oh, the listed market equivalent of this is down 20% or 40%, and hence you need to mark these down. I don't think a lot of our portfolio fall under that category, and hence we're still sort of tracking, building product, going to market, and getting product market fit.
All right. We're also excited about the enterprise SaaS startups, and India is emerging as a leader in this space. So how big is this opportunity, especially when it comes to building in India for the world?
So I think, there are a lot of good reports that have been put out, SaaSBoomi, McKinsey, and all of them have pretty much put this to be $1 trillion plus in sizing. And there are different ways to slice and dice it. They talk about vertical SaaS, they talk about horizontal SaaS, and dev tools that are getting built out. I think the opportunity is pretty big. It's important to make sure you do this in a capital efficient way so that you're able to be globally competitive.
All right. One final question, Vishesh, before I let you go, what excites you about a pitch for all our viewers here and for all the startups? I want to know, what's the selection criteria? What is it that excites you about a company?
Yeah, more often we're trying to build on somebody else's vision. So the vision needs to be large. We need to work with founders who know things that most people don't know. So, the moat or the knowledge of the domain that they carry, which is truly unique, which possibly allows them to go build a business that carries a tech moat. I think that sort of sums what we look for in companies. Strong founder moat that leads to strong tech moats.
All right, Vishesh, thank you so much for joining us on the show, and we wish you all the best going forward.
Thank you very much, guys. Have a good evening.